OpenAI makes $2 billion a month, and it still may not be ready to go public. The reason has nothing to do with revenue. It's a number buried in the footnotes of 8 separate contracts, a number most analysts aren't talking about. When the CEO and CFO issued a joint statement to deny it, did they accidentally confirm it? And now, will the company that defined the AI era be the last one to go public in it? Hey, welcome to New Stock Signals. I'm Max, the digital twin of Bill Smith, founder of Renaissance Capital, which for over 30 years has analyzed more than 11,000 IPOs. Bill personally researches and writes every video script himself. I hope you enjoy. He reads every comment, so be sure to share your thoughts below. Nothing in this video constitutes personalized investment advice. Always consult your own financial advisor before making investment decisions. Let's get into it. OpenAI is the most talked about company in the world right now. $2 billion a month in revenue, over 900 million users, an $850+ billion private valuation. So why wouldn't it go public this year? Here's the reality. The revenue is real. The problem is what's underneath it. Today, we're going to break down the 3 things that may push back the OpenAI IPO window: the cost structure, the competition, and the governance signal Wall Street should not ignore. This is not a story about whether OpenAI is a solid company. It's a story about whether it's ready to be a public one. Let's start with the number that matters most, not revenue, what OpenAI owes: $1.2 trillion. Based on current estimates, that's how much OpenAI has committed in infrastructure spending. 8 partners, multi-year contracts, fixed commitments that could span up to a decade. Here's how I think about it. Imagine signing a long-term lease on a building before you know how many people will show up to work there. That's the position OpenAI is in, on a $1 trillion scale. Let's zoom in. Take the Oracle contract, $300 billion, requiring $60 billion a year starting in 2027. That's roughly what OpenAI is reportedly projecting for revenue that year. And that's just one contract. Here's what really matters. When growth is accelerating, obligations like these are a footnote. When growth stalls, even briefly, they become the whole story. And earlier this year, OpenAI missed several monthly revenue targets. Revenue is variable. $1.2 trillion in fixed commitments is not. That mismatch is why the IPO timeline may be under pressure. Now let's talk about something that got far less attention than it deserved. The Wall Street Journal reported that OpenAI's CFO, Sarah Friar, had raised concerns internally, questioning whether the company's revenue growth could cover its compute commitments, and whether the company was truly ready to go public this year. Sam Altman and Sarah Friar responded with a joint statement. Their response? We are totally aligned on buying as much compute as we can. But we need to read between the lines here. That's not a response to funding concerns. That's not a response to a question of IPO readiness. That's an answer to something nobody asked. I've been analyzing IPO-bound companies for over 30 years. When you see a joint statement denying reports of internal disagreement from a CEO and the executive who should be at their right hand, that statement is the story. CFOs ask hard questions. That's their job. The fact that asking this question apparently created friction tells us something about how it's being received internally. That's the signal, and it's a real one. The third piece of this story is about competitive positioning, and it's more nuanced than most coverage suggests. Anthropic is OpenAI's key competitor. It likely carries a fraction of OpenAI's infrastructure obligations. But at the same time, it's taking share away from OpenAI in two key segments, coding and enterprise. But here's the number I want you to focus on: revenue per employee. Anthropic has an estimated headcount of between 3,000 and 5,000 people. Annualized revenue estimates around $30 billion. For OpenAI, those figures are around 7,000 people and $25 billion. That puts OpenAI at roughly $3.6 million per employee. Even assuming the high end, Anthropic sits at about $6 million per employee. That's a wide gap, and the bigger problem, it's getting wider. OpenAI reportedly plans to double headcount by year-end. While it's adding people into an expense framework that's already stretched, Anthropic is becoming more efficient as it grows. That's the key insight here. It's not just about who has more users or better models. It's about which company's economics are moving in the right direction. So let's bring this home. What do we actually know? OpenAI generates $2 billion a month. It has over 900 million users. By any standard, it is the defining AI company of this generation. And yet, the IPO window is anything but certain. But here's the part of the story that gets almost no attention. There is a massive wave of AI companies gearing up to go public. Anthropic, Databricks, Cohere, Mistral AI. The longer OpenAI stays on the sidelines, the more opportunity for one of these companies to get to market first. And whoever goes public first gets to write the rules. They set the valuation multiple. They set the unit economics benchmark. They set the investor expectation. OpenAI built the category, but building the category doesn't guarantee that you get to price it. The investors who get this right won't be the ones who chase the name. They'll be the ones who read the structure. 1 quarter from now, no one will be talking about OpenAI's revenue miss, but the smart investors will keep talking about the $1 trillion. If this is the kind of analysis you want more of, subscribe. We cover IPOs, new stocks, and the AI market reset every week. The kind of institutional-grade insight that used to be reserved for the big players. Now it's available to every serious investor. Hit like, subscribe, and drop a comment. I want to know, what's your biggest question about the OpenAI IPO? I'm Max, Bill Smith's digital twin. Bill is the founder of Renaissance Capital. This is New Stock Signals. We'll see you next time.